So, Sir Martin, great to have you with us. So always a pleasure to get a chance to catch up with you. Tell us about this rebranding, the reintegration, a lot of exciting things happening at S4 Capital.
Yeah, so I mean, it's just fulfilling the promise and the principle that we made, or that we had going back 3 years ago when we started. You recall the mission of the company is to create the new advertising and marketing service model and disrupt the existing one, or the old one, which goes back to the 1950s and Marion Harper when he created IPG. So that was the mission, and then we have four constitutional principles, or principles in our amendments to our constitution, I guess is what it technically is. The first is that we would just be purely digital, because that's where the growth is, and as you see from the results from the holding companies, they're still sort of languishing. It's really a dead cat bounce that they're really benefiting from the fiscal and monetary stimulus. We'll have to wait until probably 23 to see whether structural progress. But so digital is the core, and it's growing by the industry is growing by 20%, and we're of course growing at a much faster rate than that. We've already upped our guidance this year to 35%, and we'll probably go further than that. The second thing was, the data-driven model, which a model which drives the creation, production, and distribution of content through digital media and iterative process. The third thing was to go to market as faster, better, cheaper. So agility, understanding the digital ecosystem, efficiency. And then the fourth principle was a unitary structure. We think the holding company model, its Achilles heel is its fragmentation, and the more companies they add, they talk about simplification, but they really haven't simplified at all, because they still operate in a vertical manner. I mean, even Publicis, which I think from a theoretical point of view have grasped the nettle by talking about power for one. If you walk into any of their lobbies, you'll find power of 9 or 19, depending on how many names, different brands are there. So the unitary structure, coming back to your question about rebranding or the branding, the unitary branding is just the fulfillment of that promise. You remember that we've added a significant number, 11 to be precise, companies to MediaMonks. We added 11 companies to MightyHive over 2008, 19, 20, and 21. And we're now really bringing them all together under the Media.Monks brand, but with the MightyHive hexagon.
I was just looking at some of the kind of projections you've made. Firstly, you're right. I don't know if anyone else has done something like this at this scale. But what's interesting to me is that outside of this industry, this kind of network effect, consolidation is definitely a trend and clearly seems to be the way forward. Although, like you said, it's more a revenue generative idea, not so much just about operational efficiencies. So I'm interested in that. In terms of the kind of projections, you have some very, very strong projections going forward in terms of growth and the kind of potential. All of this has happened simultaneously along the time that we've seen the COVID impact, the pandemic hit.
Yeah.
Has that affected projections in any way? Are you on track? Are you still confident? Do you feel perhaps?
Well, if you look at 2020, we started the year. So we've had three-year plans since we started: 2019 to 21, 2020 to 22, and 2021 to 23. All of those plans called for a doubling of the size of the company organically, so excluding deals, over the 3-year period. That means mathematically, if you work it out, it's about a growth rate, an organic growth rate of 25%. Last year, we budgeted 30, COVID hit, we delivered 20. I mean, our total growth rate was double that because of deals, but this year, so when going through last year, I think we did plus, I think it was 19% in Q1. We did +3 in Q2, then we did 7 in Q2. Sorry, we did 23 in Q3 and 27, I think it was, in Q4, and 33 in Q1 of this year. We haven't reported Q2 yet, but we've given strong indications. We've upped our guidance for this year from 25%, which was what we needed to double the size of the company, to 30 at the end of March, to 35 at the end of April. And we're reporting our first half at the beginning of September. And you'll see, I would think probably we'll up guidance again.
I just want to get a sense of where India really lies in the middle of all this. How critical that is as a part of the plan.
It's super critical. It's super critical. Okay. We have a great business there. Puran and Robbie and others are doing a tremendous job there. But we have to be a more significant factor. And obviously, given my history, not just with WPP but with Saatchi's too, both India and I would say China, and indeed other markets, Japan and Indonesia and Thailand and the Philippines, obviously Australia, New Zealand, Vietnam. Now, actually, interestingly, with Destined, we go into Pakistan and Vietnam, which is interesting. So we're now in 33 countries, and I don't anticipate we'll be in more than about 36 or 37 countries. Won't be in 100 plus. You don't have to be in 100 plus. You can hub quite successfully in these new structures with technology. But the answer to your question is that India is absolutely critical to our plans, because currently we're 70% North and South America, 20 EMEA, and 10 Asia, and we want to be 40-20-40. So by definition, we need to be much, much bigger in China and much, much bigger in India. China, is very different. When I started WPP in '85, it's a very different kettle of fish today than it was then. Deng Xiaoping had made his famous speeches, not just one, but several, and had opened up the Chinese economy to Western investment. President Xi is taking China in a very different direction. I would say understandable reasons, because there is a rift between the US and China. It started, I think, under President Obama. It developed, obviously, very significantly under President Trump, and it hasn't changed much under President Biden. And I don't think it will change whoever is in the White House significantly. So living with a world which is, increasingly split, let's say there's a Western model and an Eastern model around China, is probably the likelihood, and navigating that is extremely difficult. We've just seen in China what's happened in a series of industries where the administration has expressed concerns about privacy or data, similar to some of the things we see in the West, and we want to expand aggressively in India, and we will do. We've made a good start with Robbie's White Balance. And now MightyHive has established a presence in India. We have to work out our model carefully there. We think the market is ripe for transparency. Our model, one of the differentiators to the traditional holding model is that we're totally transparent. So we're not buying inventory on behalf of ourselves and making a margin. It's a totally open book. And the moves that have been taken in the Mexican market recently and are being threatened in the Brazilian market sort of show, I think, the drift of where it's going to go. So the answer to your question is India is critically important. Asia is critically important.
Okay, well, it was great chatting with you. Thank you for being descriptive and sharing with us the entire plan. And congratulations once again. Bye.
Thank you. Thank you very much. Thanks for the interest.